Points at this hour. Joining me is Oliver Porsche, the CEO of Bruderman Brothers, and Tom Lydon from ETFtrends.com. Good to see you both. Janet Yellen spoke. We got a rally going. Coincidence? Correlation?
I think it's great. She's looking for inflation, right?
But is this a market that doesn't want the Fed to raise rates anytime soon? Is that why we're seeing a rally here, do you think?
Absolutely, but that doesn't mean you don't have to be careful, especially overseas. Currencies really can pay a big percentage of a downside risk overseas. So there are a couple ETFs that I love specifically: Deutsche Bank, Hedge Equity for Europe, and also Wisdom Tree. I mean, these two are
Which
good.
Wisdom Tree?
The Wisdom Tree, Europe Hedge Equity. And I think these two, HEDJ, is really important from a standpoint of hedging that currency risk outside of your portfolio.
Because as long as they keep rates low, the dollar's going to go higher here.
Yeah, and as we have QE going on over in Europe, we're going to have a European...
well, especially if you look at what the European Central Bank is doing, and we're talking about this before, they're going to be even more dovish than Janet Yellen today. And so you've got the probability. They have to be. So when you look at the U.S. as a U.S. investors, you want to be very mindful that while the Fed's low interest rate policy is putting a floor under asset prices and a sharp collapse is very unlikely, that's very different than the ability to make a lot of money going forward. And we're seeing that in some of the volatility and some of the very slow climb that we're seeing. So you're going to need to see earnings and valuations. And so for us, that goes into Europe a little bit. That's where the conversation started. And you want to hedge out that currency risk. Tom's absolutely right. Use ETFs if you want to make broad sector
So
bets.
as we hit new highs here, you're looking for value in Europe, just like you are here.
Well, and these ETFs are up double digits. I mean, we've had a nice little run here in the U.S., but we're up twice as much in areas like Europe.
Yeah, and there's still some great values in the U.S., but it's becoming increasingly different. I mean, difficult. You know, fourth quarter earnings were far from stellar. First quarter earnings, you know, we'll see what they come out at, but we're not off to a great start. And you've seen some real warnings from large cap companies with strong balance sheets for the rest of the year. So you want to be a little bit more cautious. You really want to look at balance sheets and you want to seek out value, and you got to be agnostic as to where that is and just understand the risks.
Got it. Good to see you both.
Good
Thanks for stopping by today. Tom Lydon and Oliver Porsche joining us here on the floor of the New York Stock Exchange. We'll come back.